Good afternoon and welcome to Managerial Accounting. This would be day 8 of our 30 class days for the semester. Just want to review a couple administrative items before we get started. First, as you can see on the screen, I posted yesterday morning and then I had to edit the time because I had something else get scheduled. So next Wednesday, now it's morning from 10 to 11 on Zoom. I'm going to have a review session because not this weekend, but next weekend, you'll be taking our first exam. So it is totally optional. It is completely up to you whether you choose to come or not. If anyone comes and we have a review session, then I will record it and make that recording available to everybody. If nobody is there, then there obviously will not be a review session. There's nothing to record. And so I'm hoping that at least a couple people, even one, can come at that time. I do not want you to skip another class or another obligation to be at that review session, but I had to schedule it around when I thought what my teaching schedule and meeting schedule and make it at a time I thought people might come. So hopefully people will be able to come. If you do want to come, you should sign up in Starfish. That's how you get the link to the review session. So go into Starfish, go into the My Courses area, and in the area for this class, you should see a link for or a way to sign up with me. And what you're looking for is the drop-in review session. That's what Starfish calls it. If you're wondering, well, what would I do? Why would I come to that? Typically, what I would expect we would do is take a look at that practice set of exercises that are available to help you prepare for the exam. So what I think works well is if people who are planning to come, look at that review set, pick out an exercise or two that were challenging for you, or you can't remember how to do them or whatever, and we can do those together. There will not be time in that 1 hour to go over the entire set, but I'm happy to focus on whatever people who attend want to go over. So if there's something you want to go over that's not in the practice set, we can do that as well. So I really let the review session be guided by the people who attend, but I'm just giving you some ideas of what we might do based on what's happened in previous semesters. So please feel free to sign up if you are able. I would be happy to see you there. And when you sign up, you'll get an email from Starfish that has the link to the Zoom meeting. Next, just to keep track of what's coming up on our agenda. So today we're going to be finishing chapter 17, but we carried a little bit over from the last class. So according to our syllabus, we should have finished last class. So I had changed the due date on the chapter 17 exercises to be today, but you really have all the information you need to be able to do the problem. So I didn't officially change the due date on that. As always, if you need more time, take more time. See Now is not going to close you out. You can still submit that tomorrow or the next day or whenever you finish it up. So we will start today with exercise 8 in chapter 17. And once we finish chapter 17, we'll take a brief pause. We'll switch over to chapter 18 and we will get started with that. By Tuesday, we should be back on track with our syllabus, finishing chapter 18, which is a bit of a shorter chapter. So we should finish chapter 18 still on Tuesday. And then the chapter 18 problem is due next Thursday. And that's the day that the exam officially opens. You really can take that exam whenever is convenient for you once you finish the assignments for these first 4 chapters that are on the exam, chapters 15 through 18. Next Tuesday, once we finish chapter 18, assuming there's time in class, we will talk about the exam, we'll look at the exam, we'll talk about the practice set a little bit more. If we run out of time on Tuesday, we will do that on Thursday. So definitely we'll have a little bit more conversation about the exam and what to expect. prior to when you're likely to be taking that exam. So that's my administrative reminder stuff. Any questions? Anything else you want to talk about before we get back into chapter 17? Okay. So let's go back to chapter 17. We had finished on your own or together through exercise 7. And so we're now on exercise 8. So I'll give you a moment in case you need to still pull that up. But I will start with reading the exercise. AccuBlade Castings Incorporated casts blades for turbine engines. Within the casting department, alloy is first melted in a crucible, then poured into molds to produce the castings. On May 1st, there were 230 pounds of alloy in process, which were 60% complete as to conversion. The work in process balance for these 230 pounds was $32,844. And you can see the breakdown there of direct materials and conversion costs. So our assumption is always that the direct materials are added at the beginning of the process, and then the conversion costs, consisting of direct labor and overhead combined, are incurred uniformly throughout the production process. During May, the casting department was charged $350,000 for new raw materials or direct materials and $19,840 for direct labor. Factory overhead is applied to the department at a rate of 150% of direct labor. The department transferred out 2,530 pounds of finished castings to the machining department, and the May 31st inventory was 44% complete as to conversion. So just a reminder, I did provide you with that blank Excel template. If it helps you to organize this information into a pattern, a way that you are accustomed to seeing it. I'm not sure that for this exercise it's going to be particularly helpful. So we're going to try to just do this exercise without having to complete the entire template. But I just wanted you to remember it is out there. You are welcome and encouraged to use it for the exercises, the problem, the exam. I think you'll find it beneficial. So the first thing we are asked is to prepare the May journal entry for the casting department for the materials charged to production. So it tells us right here during May, they were charged $350,000 for the direct materials. Well, what does that mean that they charged it? Just to make sure we're clear, that is the dollar amount, the value of the materials that were transferred out of the materials inventory into the work in process account. And so that's what we need to report. Transferring it into the work in process account for the casting department. Right there. And what is that for? We're moving it out of the materials inventory. So what we are doing is making sure that our accounting system is up to date, caught up with what happened in the real world of our manufacturing facility in the casting department. A2 says, prepare the May journal entry for the casting department for the conversion costs charged to production. So we have direct labor, that is one of the conversion costs. And the other part of the conversion cost is the overhead, which we're told is applied at a rate of 150% of direct labor. So just to make sure I'm being clear, let's go ahead and put this calculation right on the screen. So we have our direct labor. Actually, there's probably an easier way for me to do that. So let's calculate our factory overhead based on the direct labor, $19,840 worth of direct labor. And we are going to apply overhead at a rate, a rate of 150%. 150% of the direct labor, $29,760. So that's the overhead that we are going to apply during the month of May based on the direct labor. So for our direct labor, we're paying our workers for that amount. So we're going to credit wages payable, that liability that says we owe this to our workers. And then for the overhead, we are going to move it out of the factory overhead account. Think back to that flow chart, the hand-drawn flow chart that I have pictured for you in the reference materials. Whoops, wrong amount. 29,760 is the factory overhead. So we're moving that out of the factory overhead account and into the work in process. We're asked to do the summary entry here. Get writing off the screen, apparently misjudged how much room I needed. So if we combine those two, the wages payable plus the transfer of overhead or the application of overhead, that's a combined $49,600 worth of overhead that was overhead and direct labor, that conversion costs during the month. So again, if you look at that hand-drawn flow chart, you can see that wages payable, or the direct labor wages, are going directly into work in process, and the factory overhead makes a quick stop in the factory overhead account before it gets applied based on that predetermined overhead rate. And we learned in the last chapter, in chapter 16, how to do that. Last part of A, prepare the May journal entry for the casting department for the completed production transferred to the machining department. And so it tells us the department transferred out 2,530 pounds of finished casting. So we need to figure out how much of that, how much of the total cost goes with those 2,530 pounds. So we had 230 pounds that were already in process with a total of $32,844. We know that that's going to move out because, as we talked last class, we're using the FIFO method. The assumption is the first thing we do is finish up the beginning inventory. But we have to calculate our direct materials. Try to position this so that I can write on the screen. Maybe I'll give myself a little more room here, like that. So let me write here on the screen. So let's calculate our direct materials cost for the current month for May. So it was 350,000 pounds divided by, sorry, $350,000 divided by 2,500 pounds. So this is something that we, last class, we're doing using the template. And certainly you are welcome to use the template anytime you think it would be helpful. I'm just trying to maximize the use of our time when some of the calculations are pretty straightforward. And now for the direct labor and overhead combined, we're going to have to calculate the number of units. So we knew how many units of direct materials were added, but we don't yet know the equivalent units for conversion costs. Oops. So let's think about what needed to be done still. On the beginning inventory, so we start with our beginning inventory, we had 230 pounds. Now all the direct materials were already in. Let's scroll up apparently. And they were 60% complete already. So how much more did we have to do on those? If they were already 60% complete, we needed to do 40% of the work. Try to position that there. So 230 units, we had 40% of the work, whoops. 40% of the work left to complete. 40% of 230 is equivalent to 92 whole units. We then had the units that were started and completed. Well, we had 2,530 pounds that were transferred out. 230 of those were from the beginning inventory. So how many were from the started and completed? We transferred out 2,530 pounds, and 230 pounds were from beginning inventory. Then it must be that 2,300 were started and completed. Does everyone agree with that? Makes sense? And then we have our ending inventory. So our ending inventory, if we started 2,500 pounds this month and 2,300 of those were completed. So out of 2,500 we started, 2,300 were completed. It must be that 200 were still in ending inventory. And what does it tell us about those? Right here, it tells us they were 44% complete. We did 44% of the work in the month of May. 44% of 200 is 88 equivalent whole units. So I didn't do a very good job of getting those to line up to add them together, but we'll just pretend. So from the beginning inventory, we had 92 equivalent units of conversion costs plus 2,300 for the units started and completed, and then another 88 of work done for the ending inventory. And so that is equivalent to 2,480 whole units worth of conversion work we did this month. And we already know the cost of the conversion work because that was what we did in A2. The cost was 49,600. And that was for 2,480 units of work. For $20 per equivalent unit. So we abbreviate that EU. Scroll down a little bit. So now we need to do the journal entry for the transfer of completed production to the machining department. So we know that we're going to transfer all of the costs. We have to position this up here to make it fit. So we have to transfer all of the costs that were in beginning inventory. If I can find where I have that written so I don't need to scroll again. $32,844 was given as the beginning inventory. We then needed to complete those units. So the cost to complete those was $20 per unit for conversion costs. Times the 92 units right here. We had calculated we needed 92 units worth of conversion work to finish those units. Then what did we do? So first, we finished up the beginning inventory. Then we did some units that we started and completed. So how many units did we start and complete? We calculated that was 2,300. And what kind of costs went into those units that were started and completed? Well, we need direct materials, which we, we need direct materials, which we had calculated right here to be $140 per pound. And we need conversion costs, which was $20 per unit. So 2,300 units When we add the direct materials and conversion cost together, that's $160 per unit. And that's the amount that we finished. So the rest is ending inventory. So the other $20 per unit for the ending inventory of 88 units would be an ending inventory. The other $140 for direct materials for the 200 units in ending inventory, still in ending inventory. And what we're asked to do here in A3 is record the entry for moving out the part that was finished. And when I say finished, I mean finished in the casting department, and it gets transferred to the next step in the process, which is the machining department. So let's go ahead and calculate that, see what we get. I got $402,684. So in case I'm not being clear about this, so this represents the cost of the beginning inventory. The $32,844 was given, and the $20 per unit times 92 units of conversion cost finishes those up. And then the second part of this equation is the 2,300 units that were started and completed. So we have all the direct materials, all the conversion cost. Does anyone have questions about that? So what happens to that $402,684? When we finish with it in the casting department, we're going to move it out of the casting department. Physically, we take the material and transfer it, put it on a dolly or whatever, and roll it over to the machining department. And in our accounting records, we credit the work in process to the casting department to move it out. And we debit the work in process for the machining department. Part B says, determine the work in process casting department May 31st balance. And so I need to just do a little bit more math here. We know what's in there. We know it's 200 units. And we know that we have, for those 200 units, let me put parentheses around that. For those 200 units, we have all the direct materials at $140 each. But we only have 88 units of the conversion cost at $20 each. Again, just to be clear, I know mathematically I don't need to do that, but just to be clear, I'm going to put the parentheses around it. So 200 units worth of direct materials, 88 units worth of conversion cost. Now, you could have taken, as I already, I think, said, you could have taken this information and plugged all of it into that template. I don't think it was necessary. There was less computation involved here, but if you find it easier to always follow the same format, I would encourage you to do that. Use that template anytime you think it will be beneficial. And so there's our answer for part B. And the last question then, we need to compare our costs from April to May. So for April, it shows us here. How do we know this is April? Well, this was the beginning inventory for May. So this is product that was begun in April and not finished. So we added all the direct materials at a cost of $132 each. Our cost right down here in the lower right-hand corner, for May, the cost is $140. So we had an increase of $8 per unit for our direct materials. For the conversion costs in April, the cost was $18 each. And right down here, the very bottom line, we calculated the cost for our conversion work in May at $20. So an increase of $2. So really not anything new in this exercise compared to what we had done together on Tuesday. But does anyone have any questions about that? Maybe he's looking at things a little bit differently, trying to summarize here on the screen rather than using the template. Anybody? Questions? Put my green check marks in there just because I like to do that. And clear my screen, and we'll keep going. So exercise 9 is more practice. The information is given to us a little bit differently than what we just did, but very much the same as what we saw on Tuesday. So I think I'm going to pause the video at this point and ask you to try this exercise on your own. And I'll put my calculations on the screen. Once everyone has had a chance to work on it independently, I'll restart the recording and just briefly explain my calculations. Okay, so they're a little bit scattered on the screen, but I have my calculations here. I'm going to explain what I did. I calculated the conversion equivalent units. Get my pointer out here. So I calculated my conversion equivalent units here. The beginning inventory had 2,600 units that were already 35% done. So we did the other 65% of the conversion work, or equivalent to 1,690 whole units. We had started 105,000 units this month, but we had finished 101,300 of those. I can get that by comparing, this goods transferred out was 103,900 right up here at the top of the screen. 2,600 of those were from the beginning inventory. So we must have started and completed 101,300. We did all of the work. We incurred all of the direct materials costs also when we get down here. And then the ending inventory was 3,700 units and they were 80% complete. That's equivalent to 2,960 whole units. So the conversion units that we incurred, $105,950 or 50 units, excuse me. Right here we are, I haven't explained that yet. Hang on, I'll get to that. So in A1, we were simply asked to create the journal entry for moving the materials into production, just like we did in exercise 8. That came right from the given information up here. Same as in exercise 8, the conversion costs include the direct labor and the applied overhead. In this case, we didn't have to calculate it. It was already given to us. We can see that again right up here in the given information. And then finally, we had to do the journal entry for transferring out the completed production. So if we're using the FIFO approach, first in, first out, the assumption is the first thing we do is complete the ending inventory. This is the cost that was already in there for ending inventory. And then we had up here, I calculated the conversion cost per unit, taking the total conversion cost from here, dividing by the units that we calculated here, 90 cents per unit. And there were 1,690 units of work left to do. That's the from right here. For the units that were started and completed, this is my calculation of the cost for the direct materials per unit. It's the total cost for direct materials divided by the number of units that were started. It works out to be $3.15 per unit. For the 101,300 units that were finished, that number comes from right here. There's the total. And then we also had to add the conversion costs for those units at 90 cents each. And that's from right here. For all of those units, total of 91,170. The total cost then for the work that we finished, the units that we transferred to the next department, $429.25. We move those out of paper making into converting. And then the very last step, part B, asks us, well, what's left at the end of the month? Well, we know what's left is the direct materials for all of those 3,700 units at $3.15 each. And the conversion work, we did 80% of the work, or 2,960 units at 90 cents. Again, that came from here. So that total is $14,319. So at this point, you should be comfortable with this, familiar with this. As I've said a number of times already, if doing it like this, piecing it together on the screen or on a piece of paper is a challenge for you, I really do recommend that you consider using that template each and every time, because it will organize your thoughts, organize the information you have in the same format every single time. Any questions? Let's move on to our last exercise then for this chapter. So, what's that? Exercise 1 and 2 was from the video so it was what we should have done last Thursday. Yeah, so they're on the video. So, as I told you, the very first week of class, our focus this semester in managerial accounting is really on manufacturing companies. And it's different than what you did in financial accounting, where the focus was almost exclusively on merchandising or retail companies. And so we also, though, like to keep in mind that many of the techniques, the accounting approaches that we are learning this semester can be used by companies that are not manufacturing. And that's what we see here in our final exercise for chapter 17, process costing for a service company. So they're not selling a product, they're selling a service. In this case, they're selling electric service. Madison Electric Company uses a fossil fuel, a coal-fired power plant, for generating electricity. The facility can generate 900 megawatts, million watts, per hour. The plant operates 600 hours during March. Electricity is used as it is generated, thus there are no inventories at the beginning or end of the period. And that's always going to be the case for a service company. There is no inventory, they're not selling a product. The March conversion and fuel costs are as follows. And so another thing to keep in mind with service companies is there are no direct materials. Materials by definition become part of the cost of the product that you are selling. A service company isn't selling a product, so there can't be direct materials. There can be supplies, but no direct materials because there's no product for them to become a part of. Madison also has a wind farm that can generate 100 megawatts per hour. The wind farm receives sufficient wind to run 300 hours for March. The March conversion costs for the wind farm, mostly depreciation, are as follows. And of course, there's no fuel for a wind farm. Determine the cost per megawatt hour for the fossil fuel plant and the wind farm to identify the lowest cost facility in March. So the fossil fuel plant generates 900 megawatts per hour and operates for 600 hours. So its total megawatts. Okay, so for fossil fuel, the total megawatts would be 900 megawatts per hour times 600 hours, or 540,000, how do they abbreviate that? Megawatt hours, okay. And for the wind farm, it ran 300 hours and generates 100 megawatts per hour. And so I think that probably shouldn't have the H on there, right? Megawatt. Yeah, I think it should just be MW for the abbreviation for that. So for our fossil fuel plant, we have $51,300,000 in cost for the month, divided by the 540,000 megawatts that it produces. And the cost then would be $95 per megawatt hour. And for the wind farm, 2,700,000 divided by the 30,000 megawatts. So 95 versus $90 per hour. The wind farm is less expensive per megawatt hour. Are the equivalent units of production needed in determining the cost per megawatt hour? No, we didn't do anything about equivalent units of production. And one reason that that is true is because there is no inventory. So there's no beginning inventory, there's no ending inventory. The costs that are incurred for the month result directly in the product or the service for the month. So we've established that in this example, the wind farm is cheaper per megawatt hour, but is it reliable for generating electricity? No, because it only runs for 100, it only ran for 100 hours in March and only generated 30,000 megawatts in that time. Now it tells us that the electricity is used as it's generated. So that means the consumers used all 570,000 megawatts that were produced, and wind did not have the capability of producing that much. Okay, so this is the end of chapter 17. Just a reminder that we did not do exercises 1 and 2 together in class because they are on the video that I had asked you to watch for last Thursday. So you will need to, in order to get credit for them, you will need to complete those on your own or using that video. That the link is in the reference materials folder in Brightspace. I'm going to stop this recording now and we'll take a very short break and get started again with chapter 18.